Welcome to today's class. Today we are going to be talking about how to buy, when to buy or sell. So as you all know, every business has its secret. Okay, I usually in the traditional buy and sell, usually want to buy when the price is low and sell when the price is high. So applies to Forex. But in this class, I'm going to take you through some terms which you need to understand before you decide to either buy or sell. So one of the concepts you need to understand is what you need to know is a pipette. So one is a pipette. So what is a pipette? A pipette is simply the smallest change in the price. Okay, usually currencies are quoted in they are quoted in pairs. Okay, like euro, USD. And you see that is like it's quoted in 1 point, for example, 1.54678. Okay, 5 decimal places after the decimal point. In some other pairs like the gold, XAU, USD. Okay, this is quoted in about currently is about 4,600, for instance, 0.01. So a pipette simply is the smallest change in the price of a currency pair. So this is a pipette. All right, this is a pipette. It's called a pipette because it's very small to keep track. It's like in time, right? You have the hour, you have the minute, and you have the microseconds, for instance. So because this is very hard to keep track of, right? So it's called a microsecond. So you don't keep track of this, but you consider this. So same is the pipette. The pipette moves very, very fast. So we don't consider that. Okay. So we only consider everything on this way, this side. Okay. So that is what a pipette is. So next is a pip. Okay. I'll say for me, I like to say a pip is a senior brother of a pipette. A pipette is a baby of pip. Okay. So since this is a pipette, every other thing this way is a pip. So this is a pipette, is also a pipette, and these are all pips. So when you are calculating your profits, you only consider these pipettes. Sorry, you only consider the pip, not the pipette. Okay. So I'll go on to explain that further on the chart. Okay. Then moving on, I need to clean this off. Moving on, another thing I want you to know is a support and resistance. We have the support stroke resistance. Okay. So support is any level on the chart that when your price comes into it, okay, it bounces up further, right? It gives you a support. It's like a spring, okay? When you are on a trampoline, right? A spring, it springs you up, okay? So when your prices, because prices keep going up and down, okay? It keeps going up and down. So when it gets to a point that you see that there's a significant push up, so we consider that zone as a support. Then when it's coming from down up, okay, and can't break further up but comes down, okay, we consider this place. That same a support can also turn a resistance. So at this point, it can also be a resistance. Okay. A support can also be a resistance. So when the market is coming down towards this zone and it boosts it up, it's a support. When it's coming from below and comes up to the line, it acts as a resistance. A resistance is also a ceiling. Like a ceiling doesn't allow you grow that busts through it. So that is what a resistance is. So going further on, I want to explain. So this class, I want to make it very fast. I'm not going really deep into the details of all this. I'm just giving you explanation. So the next one we are going to talk about is stop loss, stroke take profit. Okay. So one unique thing about forex trading is that you have the control of everything. Okay. Before you get into a market, you can predetermine how much you want to lose and how much you want to make. Okay. It's not like gambling where everything you put in is gone. Okay. You can risk certain amount of your money. So for instance, you have a $1,000 account to start with. Okay. You can set a stop loss. Stop loss. Stop loss simply means if I lose a certain amount of money, for instance, $10, market take me out of the market. I don't want to lose more. So on the chart, there's a tool called the long position. Okay. Okay. And then what we call the short position. I'm going to show everything on the chart on the next episode of this video. So when you set a stop loss, you're telling the market when I lose just up to $10 of my account, which makes it now, when you lose this, equals to $990 to play with. The market will lock you out just losing $10. Then you can also set your profits. Take profits is when I make up to maybe $20, okay, on this market. So maybe you started at 1,000 and you want to make just $20, which makes your account $1,020. Say market, I'm okay with this profit, take me out. So when you set this position, when you set a stop loss and a take profit, it gives you control of your account so that you don't blow your account. When people blow accounts is either they set a stop loss or they over leverage the account. So you have control of your activities. Everything you do in the forex market, you have control of it. Okay. So that is it for take profit and stop loss. So the next concept is going to be time zone. Okay. Time zones. Wow. Why is it doing this, bro? Okay, so the next concept now is time zones. Okay. As we all know, we live in different parts of the world. Okay. My time in Canada now could be 2 a.m., 3 a.m. In another part of the world is evening, right? Or it's already night, or even the next day. Okay. So in time zone plays a very vital, it's very critical in this market, because if you don't know how to align yourself with the most active part of the day where the market moves, you're going to lose out. You're going to lose out from making profits. So in the time zones, we have the, yeah, I'm in the I'm in Canada. I'm in Canada. Okay. Then we have the New York session. We have the London session. We have the Tokyo session. and we have the Sydney session. Okay, because the world, the the day starts from the Sydney session, Australian session, to ends in the New York session. Okay, so in this case, we don't trade in these zones. Okay, these zones, we don't really trade in these zones. Okay, we target these zones. This is where is the most active sessions. Okay, and anywhere you are in the world, you have to set your time to trade so that it matches when these two sessions are open. And as one session is closing, another one is opening. So when there's an overlap of these two sessions, that's where you have the most active part of trading. So for me here in Canada, I trade between 5:30 a.m. to 2 p.m. That's the most, and that aligns with this session, the New York session and the London session. Okay, so anywhere you are in the world, you need to align yourself to when to trade. Okay, that is it for the trading zone. The next is the trading zones, time zones, and the trading session. They are, you can use them at the same time. Okay, so let's go further. These are just little concepts you need to understand. So I'm trying to break it down one after the other. Then you have to understand who are the big boys. Who are the big boys in this market? Okay? Every industry has the movers and shakers. There are people who will speak in certain industries and things will change. So in the Forex market, it's the same thing. We have big boys that make the decision and say, okay, I want this market to either go up or go down, right? And what do? They just push in their money, their assets, and you see the decision play out. So in this market, we have the central banks, of these countries, the big countries in Europe, in America, in Japan, Japanese central bank, the Chinese central bank, Australian central bank. Those are big economies, right? So those are the people who make decisions in this market. Then the next are, I would say, hedge funds. Hedge funds, okay? Hedge funds are also kind of, they are management, investment companies, right? They pull money from people and take advantage of the financial market, okay? So they have huge capital to play with, right? The next set of people are just investment banks. Investment banks, okay? This could be maybe commercial banks too. Commercial banks have branch where they take care of businesses and all that. So they also they they are the big boys. In the big boys, there are levels of big boys. Okay, so commercial banks play a part. Then lastly, I would say in these big boys are the brokers. Okay, brokers are middlemen between retail traders and the forex market. So they stand in between. They get orders from retail traders like me and you and feed it and make it possible for us to trade in the forex market. Okay, so they are middlemen. I will show you what brokers are, and they own the bank account. So when you open a forex account, you are opening that account with a broker. Okay, so brokers have huge sum of money that they take from retailers like me and you. Okay, then the last set of people in this concept I want to let you know are retail traders. As I said earlier, which you should understand by now, retail traders are just me and you. Okay, we don't have millions, trillions, okay, billions, few thousands and few millions. We also impact this market because we give liquidity to the market. Okay, the big boys make the decisions, and what do? We are like more of beneficiaries, but if you don't know how to trade the markets, you can become a prey. You can be eaten when your account is blown. So we also contribute to this market as a retail traders. Okay, so now after doing all this, what you need to know when you have this very well, you understand the concept. The next thing is for you to know when to buy and when to sell. Okay, I'm going to clean this. So okay, when to buy or sell. What I want you to understand, it's very easy. Okay, as I said earlier, when you buy something, you want to buy something when the price is low, okay, and sell it when it is high. So the market moves in waves, and the waves is like this. It goes up, down, up, down, up, down. The market doesn't just take off one way. No. If this happens, a lot of economies will crash. Okay, so it doesn't happen this way. Rather, although it is going up, but it goes up gradually. It goes up, comes down, go up, comes down, go up, comes down, go up. At some point where it meets a resistance, meaning it can't go further more, it begins to stall. Okay? It begins to show you something like this. So at this point, it's not making any significant high, unlike here. Then after doing that, it now begins to come down too, gradually, step by step. See? Step by step. That's how the market moves. And over time, you see it do like this. Okay? You just have to follow what it's doing. In a long time frame, you see that that's how the market moves. It moves in waves. When it gets to a low, it can't go lower. It now meets a support. It now makes a support and begins to go up. At this point, you can also say, so at this point where it's not making any significant high or low, we call it consolidation. Consolidation phase. Here, we call it an uptrend. You know what a trend, right, is? Something that is currently in vogue, something that is happening currently in the society. So when you're in this uptrend, what you have to do is to look for buys. Look for buys. What do I say buy? You look for where you can enter the market, right, before this price takes off. And so you get in here, where you place a buy, okay? You wait for it to get up here, then you take your profit. Take profit TP, as I explained earlier. Then the market will come and rest. It will begin to show you that it's not really going up. It will rest. After resting, it will get to a point that it will be a support to it for it to go up. You follow it again. And this happens maybe within 1 day or 2 days, this move. This will happen just within hours. When it goes up again, you see it begin to settle. And that support will form. You follow it up. So here you are looking to enter from this point. And these points are called higher highs. This is a higher high, higher high, higher high. All the highs are called higher highs on an uptrend. And these lows are called higher lows. Higher lows. This is a higher high because it's higher than the previous high. This is higher than this high, this is higher than this high, until we go up. As it keeps going up, then this is a higher low because this low is higher than this low. Higher low. This low is higher than this low. Okay. Then when it gets to this point, we call it equal highs equal highs equal highs equal high. And here is equal low, equal low, equal low, equal low. You see the difference? This is the chart. Then when it gets to this side of the trend that is a downtrend, when it's coming down, it's called a downtrend. Okay, and in this downtrend, you are looking to sell. So that's why some people say, oh, when do you buy? When do you sell? So this is when you buy. Look for good entry from after the market has rested. Look to enter from here. Okay, then when it gets to this place, you stay out the consolidation phase, because at that point the market is trying to make a decision. Is it going to keep going higher or is going to come down? Subsequently, it will come down after a long uptrend. Then when it gets here, you're looking for a lower, this is a lower high, lower high. This is a lower low, lower low, lower low, lower high. This is a lower high because this high, this high, this high is lower than this high. And this low is lower than this low. So that's why it's called a lower low, lower low. A higher high, higher, lower high. All right? Lower high, lower low. Okay? So if you look at your chart, you shrink it, right? You will see how this pattern plays out. And that's how simply Forex is. At some, maybe the beginning of the year, the market might be buying. Sometime in the middle of the year, it stalls, right? This stalling, the consolidation will just maybe it could last for months and all that. Okay, if at all you want to enter the market here, you should look for where from here, look to buy from here, because here is a support, right? When it gets here, look at how to get out of the market and try to sell, right? And this phase usually it moves very fast, right? You have to pay more attention to your chart at this point. But these points here and here, you can set your buy here because you know it's going up. You can just leave it. Okay, depends on how you're trading, your trading concept, whether you are a day trader, a swing trader, or you know, you can set it that way. So simply that is how to find your buys and your sell. So that's when to buy or sell. It's very easy. So if you like what I'm doing here, I'd like you to simply support me by subscribing to the channel, share it, like it, and also drop a comment. If you want me to explain any other topic, please send me a direct message in the comment box. Thank you very much, and thank you for watching. Goodbye.